Welcome back, everyone. This is Thomas Triple T Time with another new bullish crypto analysis. Before we dig in, if you find value in the video, feel free to smash the like, ring my bell, hit subscribe, and leave a comment in the comment section on YouTube anytime during this video. Let's dig in and take a look at Bitcoin on the daily chart. I updated this chart last night at around midnight Pacific Standard Time. And things have changed a little bit since I shared that video. So let's update. Let me get my highlighter on. Here we go. So last night I showed we got the channel. We got the channel here, the horizontal channel, and we had the ascending triangle. And Bitcoin was a tiny little doji candle up here with a small, like barely a body. It was like more like a line, and it had a wick on top, wick on the bottom. And since then, it's dropped significantly. So BTC dropped to a low of 40.8K on the news of skirmishes at the Ukraine border with pro-Russian rebels and the Ukraine troops. Additionally, the U.S. government said that Russia moved more troops to the front line, roughly about 7,000 more, versus withdrawing troops. Additionally, the market continues to be uncertain about the drastic measures the Feds will use to manage outrageous inflation. So a lot of uncertainty and potential escalation on Russia invading Ukraine. I'm catching up here. What's interesting about this move down is that this red candle here, it broke several support levels. The first support level that it broke was this ascending triangle support, D13 here, this diagonal line, broke that one. Then it broke the high volume trading level right here. Oh, by the way, this one was roughly around 43.2K was the point of intersection when the candle crossed the ascending triangle support. Then it dropped below this point, the support of the high volume trading level, this red horizontal line that goes across here. And that's approximately that line and this bottom support channel support. They're roughly around the same area, which is around 41.7K roughly. This it changes depending on the zoom level of this chart here. Let's see what else. Oh yeah, and the 50-day moving average, this pinkish line here, going down like that, it dropped below that too, and that's at the similar point as this horizontal bottom channel support. So all of the so that's 4 support levels that it broke with this candle, and that makes it extremely bullish. I mean bearish, very bearish. The next support line is this green dash horizontal line, W13, and that is roughly around 40.7K. It came close. It dropped to 40.8K, and 40.7K is this green line. So resistance, support is there. If it breaks through this, that's bad. That's bad. What you also notice that is this red candle here is the largest red candle since this red candle back in where is my, hang on. This thing's blocking it. I just noticed I was blocking it. This taskbar here. I just updated to Windows 11 and things are a little bit slightly different. Oh, there it is. I just needed to get rid of some attention here. Okay. So right here is the January the 21st. this red candle is the largest since this red candle here. What's different though is this red candle here and the one next to it had decent volume, a higher volume, and this current red candle has less than half of that, these two. So although it looks like a big red candle, the volume is about average. It's about average. So that's something to keep in mind. The KDJ line last night, I mentioned that the white J line was coming up towards the other two, and it probably will deflect, and it did. It deflected down. All three lines are deflecting down now, and they're fanning out, and that's very bearish. On the MACD, I mentioned that the MACD area here was the longest since, I don't know, it's been a long time. It's been the longest period of bullish histogram bars, and I mentioned that it's near the top, and then it may level out. It didn't even have time to level out. What it did was it just went down, deflected down, and the white MACD line is heading toward intercepting the red signal line, and that's going to be a bearish trend. You see the histogram bars dropping significantly here, and it's getting much shorter. And soon, if this trend continues, the white MACD line will go below the red line, and it'll flip bearish. Our RSI dropped from 59 last night to 48. 50 is in the middle of the RSI range. 70 is overbought. 30 is oversold. And so right now it's pretty much in the middle, and it's trending sharply down, as well as the Aqua CVD line. That's also trending down, and the momentum indicator, MOM, is also trending down. MOM was already trending down last night, and it's just trending down sharper. So bearish with these group of indicators here, bearish with MACD trends, although it's bullish currently, it's bearish trending, and KDJ is also bearish. Everything looks pretty bearish right now. If this continues, my prediction is going to be a double bear, and that's more bearish. So just a bit of volatility in the macro environment will drop this further. Let's take a look at the heat map. What you'll notice on here is that up above the cell walls up here, there's one at 45, but they pretty much disappeared. And below here, there's not much here either. But what's significant is this 30K wall has grown. It's now 524. So this has grown. You can see that over time. Back here, let me see if I can move it. No, I can't move it because I shrunk it down already. Back here is lighter red, right here. But here is like brighter red. See that? And you can see here they're more red. The reddish the color is, the bigger the walls are. And let's zoom in and take a look at the actions. You can see spoof walls up on top, pressing price down, spoof walls on the bottom, pushing it up. And you can see here, not a lot of spoof walls here. It was heavy right here in this zone. But here, they still exist, but they're tiny. And then the huge drop here, and then now what do you have here? Here, the dash line is the current price line. On top you have sell pressure. On the bottom you have some buy pressure, and so it's more pressure on the top side, pushing it down. You can see by the thickness and the size of the walls here versus on the bottom. So it might continue crabbing sideways at around 41K for a bit, and depending on how the bears and the bulls play, if there's more pressure on the top, or someone just comes in and starts selling again, it'll drop. And 41K is a very, very strong support line historically in the past several months. And we want to keep an eye on that. If it breaks towards 40, that's concerning. And if it breaks below 40, well, some people would be happy that their low buy entries will be filled. But in the long term, I'm not too concerned about Bitcoin or some of the quality crypto coins or tokens. They'll do fine. But in the short term, anything's possible given the volatilities in the macro environment. That does it for this video with a short update on BTC chart analysis on the daily. If you found this video to be of value, feel free to smash the like, ring my bell, hit subscribe, and leave a comment in the YouTube comment section. Appreciate your time. I'll see you in the next video later today. Peace.